Welcome to our webinar, A Retailer's Roadmap for Turning Invoices and Payments into Profits. My name is Scott Azzolina, and I'm the Vice President of Channel Sales for Mariah Systems. This webinar is focused upon how retailers are uniquely qualified to benefit from invoice automation and payment optimization. But before we get to the benefits, we'll first identify some of the key challenges retailers face with suppliers in processing their invoices. We'll also discuss retailers' objectives when addressing these challenges. We'll provide a high-level overview of how invoice automation works, and we'll demonstrate why automation has such a compelling return on investment for retailers. We'll show you how a comprehensive automation solution, which includes payment optimization, can be a game changer for retailers, and then we'll wrap up the webinar and address any questions you may have. So let's get started. Let's look at a typical scenario in the retail industry. Procuring from a local or regional supplier, a local store manager receives invoices and related paperwork. Following review and validation, they're then sent to corporate offices. The financial corporate manager then receives, opens, and enters each invoice into the financial system for processing, manually verifies each vendor's information. Then they contact the local manager for reapproval before actually approving and issuing payment. Just one batch of invoices from one local store manager can take up to 2 weeks or more to process. Now, multiply this weekly event by 50, 100, or more chain store locations, and you'll quickly realize how streamlining these processes can dramatically improve productivity. The nature of retail operating models require them to have many geographically dispersed locations in order to reach consumers. Many retailers often lack the ability to centrally buy for distributed locations due to certain restrictions or conditions, like shipping certain goods across borders, the need for timely delivery, as well as local variety. This is particularly true for retailers dealing in perishable goods. And though the need to maintain local buying authority is important, it does create a challenge for any central headquarters to have purchasing oversight over so many spread out locations. Local buyers must coordinate with corporate to maintain supply chain integrity. Constant communication regarding suppliers, payment terms, and invoices are needed to avoid errors and costly delays. Local stores bring in inventory on a weekly or daily basis from a range of suppliers. If they're unable to process invoices accurately and quickly, it can jeopardize relationships. Let's face it, processing payments is costly and complex. Retailers must manage a high volume of suppliers, invoices, and payments on a regular basis. If not done efficiently, they risk significant costs in the form of increased expenses and foregone savings that negatively impact cash flow. Well, given the challenges just discussed, it's no surprise retailers want to achieve several objectives related to invoice processing. First, it's critical for the retailer to understand their total liability at any given time. In order to achieve this, they'll need to have the status of each invoice at their fingertips. Centrally managed retailers need to have compliance mechanisms in place to ensure each retail location is in conformance. And hand in hand with visibility and compliance is accountability. With so many locations and individuals involved in procurement and payments, it's important to know who did what and when. With hordes of invoices continually submitted by different suppliers in different formats, and that could be email, mail, fax, digitizing, organizing, storing, and accessing them is key. Finally, healthy supplier relationships are critical in the retail industry. Suppliers want to know that they'll be paid and that they'll be paid on time. They'll want to quickly know the status of any invoice. So retailers need the ability to process invoices efficiently and accurately with visibility in each step. Now, let's take a look at the accounts payable process and how automation is applied. In the first step of the process, high volumes of invoices are received from multiple vendor locations and formats. They're all scanned and stored in the system. The invoices then go through an automated process of validation and matching. Think of fields on an invoice being compared to a vendor file or a PO. For example, do the numbers match? Are the invoice amounts the same? Ideally, the intelligence within the solution will match all key fields and move the invoices to the next step, which is approval. Any invoices which don't match will be flagged as exceptions requiring manual intervention. Well, regardless of the invoice status, the system should provide visibility into all invoices, allowing the processor to take needed action in the process. For example, route it for approval, raise a dispute with a vendor, post a transaction to a GL account, which reminds me, any AP automation solution should integrate with just about any ERP and accounting system. But back to the process. Once routed for approval and approved, the invoice is now ready to pay status. Any complete solution will facilitate the payment of invoices through a single interface, where the processor can choose the method of payment, execute and optimize the payment, and then reconcile it with the accounting system. Finally, it should archive all documents and transactions for audit capabilities and compliance. Now, let's move to the economics of automation. If you think about the journey of a retail invoice I spoke about earlier, it's really a simplified version of what actually happens. It's generally not one store manager and one corporate manager processing all invoices. It really involves many people across many departments with varied roles. When you consider how many people are involved in the manual processing of a single invoice, it can be staggering. Let's take an example of a retail organization that processes 40,000 invoices per month, which equates to 480,000 per year, which, by the way, is not unusual. In fact, some retailers process hundreds of thousands of invoices per month. If each of those invoices require at least 7 touches to process, for example, somebody to receive it, sort it, route it, review it, correct it, input it into the system, and approve it, well, that'll translate over 3 million touches per year. I'll translate that into activity and into people, time, and cost. It's a process that begs for automation. Imagine if automation can reduce 7 touches to 2 or less. For example, you can automate tasks like receiving, sorting, routing, reviewing, data entry, and storing. Those 3 million touches that I referenced earlier are now reduced to under 1 million. Now, that's over a 70% reduction in touches. In addition, you'll achieve greater accuracy, eliminating manual errors. Said another way, the average cost to process a single invoice is estimated at $19. When best-in-class automation is introduced, the cost to process an invoice can drop to $2 or less. Along with drastic cost savings, automation provides greater productivity, accuracy, and control. Having invoices processed through the system in minutes or hours, not days or weeks, allows retailers to pay suppliers when they want to. They may choose to take advantage of early payment terms or wait until the last minute without paying penalties. Now let's go back to our example of a retailer processing 40,000 invoices per month. Simple math can tell us the range of savings which can be realized. At the industry average $19 to process a single invoice, 480,000 invoices per year translates to over $9 million in processing costs. At $2, using the best-in-class automation, that yearly cost is reduced to below $1 million. Well, you might argue $19 is far too high a cost, and it's not really representative within my organization. Well, all right, fair enough. So what is your cost? Many retailers have not taken the time to calculate a number. But with $17 of a margin of savings, that translates to over $8 million of potential savings in our example. But even for modesty's sake, let's just take $1 in savings, which that provides a rapid ROI. And in that case, for $1 savings, that translates into $480,000 of savings per year. Well, hopefully we've demonstrated the inherent ROI associated with automating retail invoices. It's hard to believe why retailers wouldn't want to automate this process. And though the amount of savings through invoice automation are impressive, it may pale in comparison to the savings potential associated with payments automation and optimization. Where invoice automation makes an invoice ready to pay in your system, payments automation really executes the payments through financial institutions to the retailer suppliers, ensuring the lowest available transaction cost to the retailer. So you might ask yourself, well, why hasn't the retail market adopted automation faster? Well, for one, it's the sheer volume of payments that they deal with on a regular basis, with many processing tens of thousands or even hundreds of thousands of invoices each month. When you couple that with the thousands of suppliers who have to be paid, who each accept different forms of payment, often in different formats, using different banks and bank information, you better understand the challenges they face. And if that's not enough, the deck chairs are constantly changing. Suppliers and the people who they have to interface with move on. Banks and banking information changes, as well as their preferred methods of payment. So, what can automating payments mean to the retailer? Well, it significantly reduces the time it takes to process an invoice as well as its related cost. Instead of taking days or weeks to process an invoice, it can be hours or even minutes. Automation will not only improve the visibility of your cash, it will greatly improve cash flow through optimization. You'll now have control and complete visibility over who to pay, what to pay them, when to pay them, and how to pay them. You can reduce the cost of printing checks internally or eliminate checks altogether with e-payments. And through outsourced services, you can ensure that you're paying suppliers with the lowest transaction cost available, generating enormous savings. Now, let's look at how payments automation and optimization really works. Well, it's a combination of automation software and services to deliver the most efficient processing of the retailer's payments. And it begins with a payments processor who brings a network of suppliers. The supplier network is matched against the retailer suppliers, along with the types of payment the suppliers accept. For instance, that could be check, ACH, or virtual cards. On behalf of the retailer, the payments processor continually recruits suppliers who are not currently in their network, as well as getting the suppliers to accept e-payments, particularly virtual cards. Once an invoice or a batch of invoices are ready to pay, the payment information is sent to the payments processor. The payments processor will then ensure optimal payment method for each supplier is used. Since transaction costs vary by payment method, and an example of that wire could be $50 or more, it can cost up to $3 or more to process a single check, and ACH can range anywhere from 15 cents to 95 cents per transaction. Well, this can translate into significant savings for the retailer if it's managed properly. And for payment processors, there are heavy incentives to promote usage of virtual cards. There are no transaction costs and even rebates available to the retailer for using them. So this is by far the best payment method. The payments processor manages and executes the payments with the financial institutions, and that can be in any currency, then posts and reconciles back to the automation and accounting systems for full visibility from invoice receipt through payment. For retailers whose payments amount in the tens, hundreds of millions or more, this service will provide exponential savings. So what does a credible invoice and payments automation solution contain? Well, first, it must be capable of handling high volumes of invoices, suppliers, and payments. It should be able to manage and execute any type of payment, but also promote and migrate suppliers toward e-payments. The solution should ensure the retailer is getting the lowest transaction cost for any payment. It should also provide or take away, rather, the retailer's pain of managing ever-changing information for multiple suppliers, contacts, and banking details. And given the sensitive nature of financial data managed, the solution should be secure. And finally, the solution should integrate with existing ERPs to provide visibility for the entire invoice journey, from receipt through payment, posting, and reconciliation. Well, of all that we covered today, I hope you'll at least take away these three things. First, that automation can address the unique challenges retailers face concerning invoice processing. That a comprehensive solution should address both invoice automation and payments. And that AP automation does more than just deliver a proven ROI. It delivers transformational levels of savings, as well as potential rebates through payment optimization. Well, thanks for joining our webinar. I'll end with providing my contact information as well as addressing any questions that you may have. So I'll pause right now and see if we're getting any questions in. Okay, it looks like we have one. And it's a good one. Okay, so the question is about virtual cards. Since I mentioned it, they want to know, well, really what are they and how do they work? And what's the benefit of using them versus other payment methods? Okay, well, as the name implies, a virtual card isn't really a card, but it's a number. And that number is one that's the issuer will randomly generate for single use, and it's tied to each payment transaction. So you have to use a number for a specific amount over a specific time, or it's no longer valid. Well, the advantage of using them is that they're more secure, they're much more efficient, and they're less costly form of payment. And those savings and costs can be translated and benefited over to you, the client, passed on from the issuer and the payments processor, and that you can even get rebates for using virtual cards. So hopefully that answers your question. Okay, we have another one, and it says, well, typically, how much does automation solutions cost, and how would I factor that into analyzing any projected return on investment? Okay, well, the cost of any solution could vary according to the volume of invoices you're processing, and automation solutions, admittedly, they're not inexpensive. But the point about ROI is a valid one. It does provide a rapid ROI, and it makes it much more less of a concern. So I'll just give you an example. If you took that $40,000 per month invoice volume that we talked about in our example during the webinar, you might expect to pay several $100,000 per year for that solution. So for example, maybe it's $400,000 to $500,000 each year that you're paying for a solution that's going to process that level of volume of invoices on a given year. But if you factor in the savings, which result from automating, and again, if you go back to that example, let's say it's just a modest savings of $1 per invoice, well, that translates to $480,000 a year, which essentially covers the cost of the solution in the first year. And that doesn't even factor in the savings that we talked about from payment optimization, which could be much more significant. So, okay, looks like we have another question, and that one is, well, how does an organization go from a completely manual process to implementing an automation solution, and where would one start? Okay, well, typically in any journey towards automation, there's going to be a solution discovery. You're going to leverage professional experts that are expert in business processes and automation, and they're going to work with your organization to develop the optimal workflows. So once they've gone through that solution discovery and identified what your optimal workflows will look like and how that will relate to the automation system, well, then it goes through various stages. So you don't just go live right away. It goes through a design phase, which we just alluded to. It's part of the solution discovery. And then from there, it goes into a quality assurance and testing phase, and then eventually into a production phase. But you can be rest assured that your organization be well trained prior to any system going live. So hopefully that answers your question. All right, I'm not sure if we have any other questions. Give it a pause here, see if we get any more. Okay, well, looks like that's it. Well, thanks again for joining our webinar. Hopefully you found it productive, and enjoy the rest of your day.